TGIF warriors, anyone else in here feeling a little knackered like me? Give me a Y if you're knackered. Give me a Y if you know what knackered means. You're probably from the UK if you do. Okay. Knackered. No idea. Okay. All right. Well, there's a few. No, Ziggy, man. Stop taking Viagra with your coffee. Okay. Olivier is talking about the dollar being ready to correct. He talked about a false breakout in the Dixie, and I just want to tell Oliver that he might be onto something here, because we did make a new low. I think Blake was waiting for 1320. He said he was long a little bit, but he wanted to buy 1320. Great number by Blakert. Okay, so there's two drives for you, Oliver. I'd love to see a rally back towards 114 sometime next week. So the Fed break narrative did actually manifest in many markets this week. So first of all, we have the S&Ps. Steve and I were talking about it up here. You know, we've broken some trend lines. Believe that we're now lower on the week from 61.8. So that was part of the narrative for the give back in February. We'll see how much we give back. Maybe it's, 25.5 back here, halfway back is, feasible, and this will hold, and then we go again. So here are all the fibs. The other part of it, the give back, was going to be crude, and crude broke down and cooperated. Pretty negative week, trying to hold here. Something else we talked about in the room. And Shy Girl, when she was here a week ago, had this line, and talked about it Saturday with some of my guys that 55.5 could be it. So this was a pretty classic 3 drive. So crude's in a give back mode. So a lot of it was fueled by the dollar, Olivier. So I'm saying it the other way. A very strong week, even though we're in a bit of a give back here in the dollar. Hard to say this is a bad week. I think that we are going to break out to the upside. But, if Olivier's right, maybe we get a pullback into this 96 level. That'd be a decent level to try, 95.80 in there. But that would be, maybe a rally in euro back to that 114, 114.20 level. So also the Fed break scenario started a little early in the metals. And the metals are fighting back, though. That's the difference. So the metals are fighting back here. Steve showed a count where we could possibly make one more new high. When I look at the RSI here, really no divergence up here on the 4-hour before the sell-off. So possible we get a push up to new highs with the dollar pulling back. So gold with a strong dollar actually really, let's see, really had a pretty good week considering how strong the dollar is, but that should be no surprise because it's been fighting dollar strength, and dollar strength really hasn't affected it all the way up. So there's something else going on in gold that's going up against the dollar, going up against all currencies. So, looks like we have some type of bull market here, and I just can't chase it up here. Even if we go to new highs, I'm still going to wait into the March-April time frame to see if we get a higher low to do something there, have some cycles do there. And the yen holding up pretty good despite the risk off. It's really following what's happening in yields, and yields came off. In fact, I'm going to talk about that before I pass it over. But, on the weekly, almost got up to Steve was talking, maybe we could do 1080 in the end, but it's starting to run out of steam. But I still look at this high right here. This is what keeps me from shorting it. Look at the momentum we had on the 1 hour. So I actually would prefer to see, the end rally. And what would spark it, since it really didn't come down with the stock market falling, would be related to the yield market. And also crypto's looking pretty good here. So here's a 10-year. We had a little bit of a bounce from here, and it's really got to dig its heels in. If we're going down here, the end's fighting it. So we'll see if we're going to get a higher low here in yields with stock selling off. I have a hard time wanting to short bonds with the S&Ps doing what I think they're going to do. So those are my views and my thoughts. Give me a why if you guys know kind of where I'm at. Would love to see the dollar pull back. There probably are, I'm calling them counter trend trades for a dollar pullback. Pretty negative week in equities, so I think we're in a pullback mode there. Crude, I think, has confirmed. I don't think we're going to see 55.5 again. Targets were 50, maybe 48, but looks to me, yeah, that's a great point, Konstantinos. Yeah, if the gold can perform with the dollar being sideways to stronger, you're right. What would happen when the dollar sells off? It would just be like having another booster engine on it, right, bro? It's like you put on a rocket underneath what's already accelerating. So with that being said, I'm going to pass it over to Blakerd. We're all ERED today. I'm Dalerd, and then the Stevards will be here because we're all knackered. And how you handling being knackered, bro? Yes, I definitely help a lot of people with insomnia. So anytime you have a hard time getting to sleep late, just give me a call. We'll have a conversation for about 2 or 3 minutes.
It's not that. It's not that. It's not the. It's not
the market.
It's just the market,
man.
Oh,
see how? Yeah.
It's
well,
just,
I mean, it wasn't slow for your Kiwi yen short, Blake.
No,
hey, all you need are one of those.
Go ahead.
No, all you need is one of those a week.
Yeah, I mean, it hasn't been a bad week. It's been, it hasn't been a bad week actually. So, but in this type of market, just trying to find those rare moves has been tough. So,
let me just, and I'm going to stop interrupting you after this. I was at a doctor's office, and some lady came out of her car and said, "Hi, how are you?" I said, "I'm fine. How are you doing?" And she said, it stuck with me. She goes, "I'm doing just fine. Any day is a good day if you're staring down at the grass."
Yeah. Yep. Absolutely.
What do you think, man?
100% agree. Yeah. Every day above ground is a good day.
Yeah.
So
all right. I'm through interrupting.
No, that's the way I look at life. So no, that's true. But I don't know why that had to do anything with anything. But anyway, I'm glad you pointed that out. So here we are with a really, really tight trading range in the euro. Euro's less than 30 pip trading range thus far. We are near the highs. I had a bid in the euro dollar at 113.20. It's actually, I'll tell you what, it's 113.20 and 0.5 of a pip. So I didn't get hit because I was about 2.4 pips away from getting hit, and didn't get hit overnight. And here we are bouncing. So we made it like a slightly lower low here in the euro, and we talked about this yesterday. I don't know if you remember. Yesterday I said we were bouncing, and I said, hey, what I'd love to see is I'd love to see one more low. Oops, that's not the color.
I remember.
Yeah, I said I wanted to hit one more low, and then I was going to get long, and that's exactly what happened. It just didn't hit my order, and I was asleep, obviously, so I didn't get to take advantage of that. So, but you were talking about possible recovery, or a little bit of a sell-off in the dollar. I think that is possible. I mean, if you look at the dollar index, we broke out of this this triangle, okay, which in all actuality, if you just let me just zoom here and zoom out. So we popped out of this minor triangle, hit this resistance. In all actuality, the triangle might be like this because this is more symmetrical, right? This is less symmetrical. This is more symmetrical. And matter of fact, even a move up to here would be, probably give us really good symmetry. But I don't know what we're going to actually form, but that could actually be it. And we hit a brief new high. You can see that brief new high here. Yeah. And then we're reversing. Now, I wouldn't put it past the market for the next week, as frustrating as this is, and I hate to say this, but I wouldn't be surprised if we just trade right in here for the next week, and then we'll find our breakout. Whether it's up or down.
I like that, Blake. The compression building in there.
Yeah. Me too, but unfortunately that compression building could last for another week or two, and then it's going to be crappy. You know what I mean? It's going to be like then we have to deal with the repercussions of a sideways market. I got a comment yesterday regarding the dollar yen, and this is from Chi in the chat room. We were talking about, and another trader, Uresh, in the chat room as well. We were talking about risk on, risk off, and he said well, the dollar yen not breaking down below 109.50 tells me that this is a consolidation in risk appetite. Yeah, the S&P is really not going to break down as a result. And I'm like, yeah, that could be the case. But what I was more focused on is, the big reversal candle we got in the S&P yesterday. But I have to agree that until the dollar yen really starts to break below 109.50, whoops, that's not what I want to do. Break below 109.50, I can't get too bearish risk. I can't get, look at this stock market and say, all right, I definitely want to be short the stock market right now. I just can't say that. So I think we could end up being a little range bound here. I have to point out though that the S&P really is where did I just go? Okay, here it's up here. The S&P is struggling at the 200-day moving average. We came out of a little bit of an ascending wedge, and we may just continue to be range bound here in the S&P as well. It might look like something like this.
Can I lay out a caveat, Blake?
Yeah, go ahead.
Because it's very it is the way everyone's going to look at the market, because if there's going to be risk off, of course, U.S. dollar yen should be heading down with yields heading down. But that may be the hook to keep people out of the short side, because there are times when yields go up while the market's going down, and there is no big flight to quality with risk off. Well, just putting it out there that is a possibility, that we don't get flight to quality in bonds while this is happening, and the yen could go up. U.S. dollar yen could go up, and maybe the market could still go down.
I was also talking with one of the bigger, if not the biggest, equity market trader that I know personally, and he's like, man, FX is dead. And I'm like, yeah, it's really, really challenging. There's just not a whole lot to do. He's like, man, rates aren't moving anywhere. And I'm like, they're not. They're just, rates are stuck. And so the market's in a standstill at the moment, and I think you have to just realize that. Does that mean all is lost in the FX market? The answer to that is no. You got to be very much around for the currencies that are moving. Like, for example, you look at the cable. The cable hit the 38% retracement. The pound has the potential of really still bouncing, or actually, let me take that back. Has the potential of moving based on new information that we get for Brexit. So I think you have to identify the cable as, hey, there's some possibilities here. I think 130 to 129, that defines the trend right now. So in other words, a breakout above 130, a breakdown below 129, that's going to tell us, what we need to do with the cable. I think the Aussie is weak. Now I was worried about this yesterday. I don't know if I said it here, if it was in the chat room, or maybe it was just in my head. I was a little worried about this, breaking down below this support and then not breaking down, and that's kind of what we've got right now. So I think you got to be a little careful with the Aussie, because if we do bounce and risk, then the Aussie is going to end up, holding this dotted trend line. You can see it's a concern of mine. That's why I put in this dotted trend line. And like I said, I can't remember if I wrote it in our analysis or it was just in my head, or I don't know. But anyway, the Kiwi just paused at the 618 retracement. So you can see how we hit a new trend low, hit the 618, a lot of support down there. And actually going back, let me just read the basic technical analysis. Aussie dollar is very close to 70-75 support, but bears take note that as long as this level holds, we could be range bound for now. That was my concern from yesterday. And you look at the Kiwi. Remember, I write the end of day analysis for the basic technical analysis every day for all of our instruments. So last night in the Kiwi, no change in analysis, but we must note that we did close below the 200 DMA once again. Oh, the day before. The New Zealand broke down aggressively out of the Gartley pattern, touching the 50% retracement thus far. Further support seen at the 618 retracement and horizontal support at 67.24. And when I say horizontal support, you can see all this horizontal support through here. So we hit that 618, and now we're bouncing a little bit. So again, I'd be kind of hesitant right now being, too aggressively short the Aussie and the Kiwi, as we have, maybe some risk appetite coming back in the market. Now, the one currency pair that, is going to probably be a mover today is the dollar Canadian. Now, I'm going to tell you right now, we are what I would consider range bound in the Canadian. So we invalidated the and I'll draw it out for you here. Let me grab my pen. Let's see, grab pen color. I want black. We invalidated the bear flag pattern. There's a bear flag pattern look kind of like that. We invalidated it as we came back through the breakdown point. Okay, so and then really kind of invalidated when we came through this downtrend line right here. Okay, so with the dollar Canadian, you see that we're backing up against a lot of. You can see this right here, right. That 50% retracement is going to be big resistance. Okay, so we have big resistance right there. We have support on the breakout here. So now you have this box, okay, in my opinion, this is the box of despair. No, I'm just kidding. It's the box of candle box. It is the box of cookies. No, it's the box of despair. Okay, so we're smack dab in the middle of it. Okay, so if we're in the middle of this box, what I would do based on how you feel about the dollar or you feel about the Canadian, and I really don't have much of a view here, so I'm just going to tell you that right now. I think that you can be a seller near 134, or at the top of this box, or be a buyer down at 132. Unfortunately, we're at 133 right now, so we're right smack dab in the middle of the box of despair. It's the box of despair. No, I'm just kidding, but you can see we're right in the middle of that. So what I would do is just trade that as a range. So if you get a dip towards 130, you could be a buyer there. If it rallies to 134, you could probably be a seller there for today, especially with Canadian employment coming out. So going to Canadian employment, you can see that this is what we're looking for. Not much of a big change in employment, but we are looking for a tick up in unemployment. So as long as the employment numbers stay above, as long as we create jobs in Canada, even if the employment rate ticks up a little bit, it's going to be a non-event. But if the unemployment rate ticks up and we actually lose jobs last month, then what's going to happen is we should spike up towards this 134. But if you guys feel that crude oil is strong and the Canadian employment is just seeing a hiccup, then sell it at 134. I'd probably be a little bit more prone to buying a dip down at 132. Taking a strong looking at this longer term channel, if you will. Taking that longer term channel, I'd be more prone to buying a dip towards 132 today. So if you gave us a stronger Canadian number, let's say we create 15,000 jobs and unemployment stays at 4.7%, 5.7%, excuse me, or it goes up to 5.7%, but we create 20,000 jobs and the dollar Canadian slips to 132, I'd be a buyer down there. I'd rather do that, actually, just taking in the longer term uptrend of the Canadian. But, like I said, there are opportunities. You just have to be kind of selective in what you're doing. One of the other currencies that I think is really interesting right now is the US dollar Norwegian krona. We have broken higher towards 160, 150. This has been a really nice squeeze. Actually, let me delete this really quick. A lot of people were getting very bearish the US dollar Norwegian krona on this big head and shoulder pattern. Look, I was too. I played it. I played this shorter term head and shoulder pattern, which is way up here. This one, head, shoulder, shoulder, neckline. I played that one. But I was looking at the longer term head and shoulder pattern thinking, man, if we could break through 840, this is going to be a really good move lower. Well, obviously the market was thinking the same thing too. And now they're getting, squeezed. Now the question is what to do with the US dollar Norwegian krona. I think we've moved quite a bit. So if you think the dollar is a little frothy here, it's a little overbought, you might look at the US dollar Norwegian krona as a decent short. And the reason why I say that is because if this right here, we traded above this resistance and we get a false breakout, this might be a nice reversal lower. Look at these 4-hour candles. Look at how many positive 4-hour candles that we've had. Hey, I've got a new nickname. Who's around? Stelio, Steve, Dale.
I'm not here.
Okay, I got a new nickname, and the first time I've ever heard this, this really talented trader in our office. Matter of fact, he's a new member to the Gallows team in Connecticut. He called the Norwegian krona, Swedish krona, a nickname. He called it the Naki Saki, and I about fell out of my chair. He goes, yeah, that's what we always called that's what we always called the Norwegian krona, Swedish krona, the Naki Saki. And I was like, wow, look at that, the Naki Saki. So,
I for a very short period of time, I traded swaps, Norway and Sweden, and it's Noki and Stocky. That's how they used to call them. But anyway,
oh really?
Noki Soki sounds better.
Noki Stocky, Naki Saki. I thought it was funny. It's the first time I've ever heard that, because you don't meet a lot of people that trade Scandinavian currencies, if you will. But anyway, but I think the Naki, if you will, this little false breakout might be, if you guys want to play a dollar reversal and say, oh, I want to short the dollar. Hey, look, this might be one to trade. I've been waiting for this move. I mean, if you read the basic technical analysis of the U.S. dollar Norwegian krona, you read it throughout the course of the week, where it is. You can go all the way back to the beginning of the week. Reach key area support, channel support, breaking, approaching downtrend line. If broken, could turn the tide higher for the pair. We closed above the trend line, now puts the 860 level back in play. Bears, be careful. So, it's just showing that we're going to go to, 861. And I've been expecting this move, but now that we're here, this little false breakout. Hey, look, if you feel the dollar's a little overvalued, and we're kind of range bound in the dollar index, then playing it on the short side might not be the bad idea here. I'm not short. I'm just trying to give you guys some ideas. Anyway, a couple minutes till the Canadian employment, so I'm going to pass it back over to you guys. I hope everybody has a wonderful Friday. Good luck trading, and don't forget to visit our sponsors, Forest Park FX. And if you haven't figured out how to get in touch with them, Steve will show you, and make sure you can join ForexAnalytix possibly for free if you trade through one of their preferred brokers. This way that you can be in the reimbursement program. So, all right, guys. Well, good luck, and TGIF to the three of you.
Thank you, Blake.
Thanks, guys.
Okay, so we have go on.
On our first page, they can now also find the link to the Traders Expo page. We're going to be at the Traders Expo the 10th, 11th, and 12th March in New York, and we're going to get together. If you're interested in participating, you can just fill in your data here, and you can follow this link if you want to register. It's free to participate. So you can find all that. This way you will. By the way, Greg is going to be with us as well. I believe that most probably Blake will be as well. So if you want to come and spend some time with us, we're going to be there, and we're going to get. Yeah,
Steve. What day is the ticker tape parade?
11.
Downtown
Monday,
New York, 11. with all you guys in a convertible waving to the crowds.
Monday the 11th.
Okay, that's
of March.
Well, dress warm. When you're on the float. I wish I could be there with the rest of the crew. You guys are going to have a great time. And what a great opportunity. Forex Gal is going to be there. So bring your 8x10 glossy autograph photos to hand out to all our fans, okay?
Perfect.
All right. So we have
Canadian data employment.
We didn't have that much overnight. Bank of Mexico didn't change rates, didn't really do much. We had Norwegian GDP came in 0.1 worse than expected. Really not much in terms of news. So we for people who were listening to the webinar yesterday, after the webinar finished, Trump actually said that he's not going to be meeting President Xi of China before the 1st of March. So markets didn't like that very much, because they were kind of expecting a meeting and some kind of progress before. And we also have UK Prime Minister May, who is traveling to Dublin apparently today to meet with the Irish Prime Minister, because it seems that the biggest obstacle now for the Brexit agreement remains the Irish border issue. So let's see if we get any kind of progress in that, even though the European side said they're not really negotiating anything, but politicians are politicians.
For sure.
Anything can happen. Okay, so we have the Canadian data in about 10 seconds, and
by the way,
after that,
the Canadian dollar is at resistance here, so I would be paying close attention to this area. Here we are on the 4 hours. Oh, and there it is.
Oh, big beat. Jesus.
Yeah, there it is. You can see the movement.
Wow.
Yeah, I told you we're on a resistance.
Unemployment ticked up, but participation rate ticked up as well. So that's a nothing. But yeah, this is a big number.
Yeah,
wow.
Plus 66.8 versus plus 5 expected. So that's a huge beat.
Small revision, low, but really
biggest candle on your chart.
Yeah.
Going back to where the highs were.
We had employment data come out 12 times stronger than the market expected, Coach. So, no big surprise here. And as you see, technical levels have a magical way of, more often than not working with, announcements as well. So, we were at resistance, as I said. So there was clearly a good risk-reward opportunity if you're a short-term trader to be short against this confluence. So let's see what's going to happen from here, because it's not. I'm not really convinced that the move lower in the USD CAD is over. We might be consolidating in, as I've said multiple times, it's very, very hard to say in advance what kind of a corrective move you're going to get. But for example, one scenario would be that we're going to form some kind of a triangle here, right? And then we're going to push lower for one more leg to the downside before then resuming higher. So keep in mind that there are several scenarios, and it's far from certain that we're done with the corrective move lower. It's probably corrective, but as I said, there is a high chance that it has still one leg to go, right? So I wouldn't be trying to buy the USD CAD yet. I would be doing it more easily if we had, after this flag, like a more complete leg lower. In that case, I would find it easier to assume that that was some ABC correction, but now we might still be in B, right? We might still be in the corrective leg of the correction. So be a little.
You're one of the most patient guys I've ever watched or observed. And what an attribute. I mean, I don't think you ever have FOMO like some people do.
He's not patient when he's driving. I can tell you that.
Oh well, yeah. He doesn't wait for confirmation on the highway before he changes lanes. All right. You are patient though, Steve, and that's such a great attribute to have in this game.
It's actually quite easy, because after you get hurt a few times, then you start looking at it as a matter of for example, why should I be hitting my head on the wall, right?
Yeah.
So it's I would call it more or less self-preservation.
Okay.
Instinct.
I heard that a friend of mine used to say, Dale, how many times do you have to get hit in the head with a ball-peen hammer to know it hurts?
Yeah,
right?
Exactly. Yeah. So it's more or less that. I'm not that patient as a person, but since this costs money not to be patient, you prefer not to.
Yeah, I understand. Yeah, you got to be be a good steward. So you're being a good steward of your capital. Yeah, and impatient with everything else in your life.
Not everything else, but right. With several other stuff. But I have to admit that one of the attributes that does improve with age is patience. That's true. Not in trading, generally in life, right?
Yeah.
I mean, when you're younger and restless, it's very hard, being patient and being right. Taking it one step at a time. But the older you grow, the easier it becomes. So that's one of the things in human development, over the years of a lifespan that does work for you as a trader, right?
Well, I might be an example to refute your theory. Old and impatient. How about that for a combination?
I don't know. You're the only one that can say the. You know yourself better than anybody. So
Yeah.
Okay.
I'm just joking around.
Yeah. So that's the situation here with USD CAD. So if we do see some kind of a resumption lower and some acceleration, I'm then going to be looking for one more leg lower. And if by then we get enough price action to be able to determine with more certainty what's happening here. So let's assume that we come down, we stop somewhere here, we come up, we stop somewhere there, and then there is an actionable trend line that can be defined as a trend line of support, because this is completely arbitrary as an example that I drew, because there's you can create infinite number of lines passing through a single point, obviously. So then I might even be trading a breakdown for one more leg lower. But the market has to first develop some kind of a obvious support for me to do that. Now, we have a question about the USD SEC. I think that Blake covered completely the USD NOK, so I have nothing to say. USD NOK is also at resistance here, so I'm monitoring to see what happens from there. But definitely, we've now lost symmetry in that potential head and shoulders formation, and that's not a good sign if you were looking for much more weakness. And if you remember, I had given the triangle example that very often something that looks like a nice forming head and shoulder formation just proves to be a triangle. And that's one of the reasons why I didn't like taking this specific trade, because the previous trend was clearly higher. Now, the other question we have is about USD SEC, and as I was saying yesterday, USD SEC has really no clear resistance until we retest the previous high at 944, 945. Okay, so I think that this breakout is legit. Obviously, nothing can move in a straight line. So we've had quite a strong move higher, and we're seeing on the 4-hour chart here quite a nice reversal. So I would definitely not be surprised to see some type of a pullback. But I do think that most likely that pullback is going to be an opportunity to buy USD SEC once again. USD SEC definitely one of the weakest currencies lately against the dollar. So why not one of the preferred? Plus, we had this nice technical breakout. So the combination of those two make it quite an appealing option if you want to play US dollar to the upside. Now, another thing I wanted to show, we talked about it yesterday, and so far it has been playing out very nicely, is the Nikkei. I was showing yesterday the possibility that the Nikkei could be developing like a double top formation, and you can see it here. So we broke below it at 20,500, and that now targets the 20,000 area. If you remember, I warned that we might get a big rejection from 21,000, and 2 days ago, and we've had some very nice follow through. So the question is, why isn't the USD yen following? Besides the fact that it's undoubtedly more or less manipulated. I can't really answer that question, but I can tell you that this type of a consolidation, has a decent chance of breaking lower. And if that happens, you can stick a fork in it, because I do think that we should at least make it down to 108, if not lower from there. So obviously, Nikkei is a better thing to trade than the USD yen at the moment, and generally the USD yen, besides this move, with the exception of this few days move here, it has been horrible, like the Euro USD has been, and in some extent the pound. But I would still prefer to be short if I had to have a position in the USD yen. Now, earlier today, I added to my S&P short position, because this looks to me on the 4-hour chart like a consolidation. So I would expect at least one more leg lower towards this 2630 area. At the very least, I was saying the same thing yesterday. In which case, I will probably reassess depending on the price action, and either I'm going to take profits there, because my cost average now is almost at 2660, So I'm either going to be taking profits there, or I'm going to be keeping my position. I want to see, of course, how the structure lower unfolds, because if we get one more leg lower and we stop roughly there, okay, it might be like a short-term correction. But if we see some kind of an acceleration here, so for example, potentially like a wave 3 in the short term, I'm going to be keeping my position, looking for at least 25.95, this area to be hit. If not, the next area of support, which is roughly at 25.45. Okay, so those are my targets: 26.30, 25.95, and 25.45. Those are the next 3 downside targets if this keeps on playing nicely. There is a friend here asking, actually it's Kostas. Kostas is asking, if I would buy silver here. And I have to say, I said it yesterday as well, and I wrote it in the chat room a few minutes ago. Actually, might have been an hour, but doesn't really matter. This is the 4-hour chart of gold. So I think that the situation is quite clear. I mentioned it yesterday before the breakout that this price action looks clearly corrective to me, and I wouldn't really be surprised if we saw another break higher. It looks more likely than not, and it seems to be doing the move as we speak. And silver has done the exact same thing a few hours before gold did, from not the same formation, but an equivalent formation. We have a flag in one. We have a pennant in the other one. It was, Coach, it was an easy call.
Okay,
because those are textbook formations.
But I bet it wasn't easy for hundreds of other people that were, seeing the dollar go up and thinking this gold correction could go to 1280. That's what I was looking for, pull back to 1280. But, after hearing you yesterday, I, changed my mind for a while. So, it was easy for you because you're a pro.
I try to be as professional.
Well, you are. Stelios, do you think that Steve is a pro? You want to back me up on it? No? All right.
He's good. He's very good.
Yeah. In fact, Steve, I'm scheduling interviews for April. It's very hard to get in here with me, but I have an open day on April 24th.
You want to interview?
Does that work for you?
Something tells me that I'll be here every day.
All right, bro. Anyways, that was a great call.
So that obviously, and don't forget, Coach, that sometimes, it's very easy just noticing the obvious. I mean, we said yesterday that look how resilient the metals are, considering that the dollar was well bid, right? Yeah. And that's something that you have to take into account. So, obviously the path of least resistance remains to be higher, but I have to say once again that this is not the area that I would be looking for a longer term exposure lower. So, I think that, both of the metals should move considerably lower, perhaps after one more high, because now one more high looks, looks quite probable. But I wouldn't be looking to get caught long up there, because I think that, people that might be jumping on board, might be joining the party late, will once again find themselves being at the wrong side of the market at the worst possible time. The market loves to do that. You know that, better than anybody. You've been trading the markets for decades.
Don't remind me.
That's not a bad thing.
All right. I'm such a masochist. Go ahead, bro.
Forex Gal says, sleeping not permitted in this business. Yeah, that was a comment for Blake, that he was asleep, and yeah, that's true. Unfortunately, we are forced to do that. It's our human nature, unfortunately. DXY big wind up triangle. What are the banks doing? Based on what was that comment about the banks? Give me some context. Hello guys, could you please ask Grega about Kiwi? I lost money on my both counts. Thank you. Grega is not currently with us, but I have no problem giving you a freebie because Grega is always here with us in ForexAnalytix because we have his analysis on a daily basis. So let's see what he's looking in the 4-hour chart. And this is what he's looking in the 4-hour chart. A triangle from what I see here. So, or an alternative count B, but in any case, he's looking for lower prices. And this is the, no, this is the weekly. Let's go to the daily and see what he's thinking of the daily. Yeah, so as you see, he's looking for lower prices before rebound higher. So that's what Grega is looking for. Steve, hi, could you tell your opinion about Euro Yen? Yeah, absolutely. Thank you for reminding me. I wanted to say that both Euro USD, let's have a look at them on the daily. So both Euro USD is currently at support. I said it yesterday. If you remember yesterday, we were actually at the lows of the day when we had the webinar, and I said that, listen, I'm not doing anything with it. But if you want to be if you want to be long the euro, this is the place and time to do it because the risk-reward ratio is excellent. We're currently testing this channel's support. We don't want to see lower prices than 113 if we're looking for a rebound. So, it was like a, stop of like 30 pips roughly from yesterday. So obviously the reaction so far today, it's not like bullish or anything, but we did get a reaction from there. Equivalently, if we go to the Euro Yen, you'll see that the same exact situation applies for the Euro Yen. Now, if, given my tendency to look lower in the USD Yen, obviously, if I had to choose to be short Euro USD or Euro Yen, I would go with Euro Yen for another push lower towards the 61.8 at 120. Okay, because this is likely a flag, right? And it looks much cleaner than Euro USD. I mean, Euro Yen has had some movement oppositely than Euro USD, which had none. So I think that Euro Yen looks much better for a move to the downside than anything else. Okay, but I would wait for confirmation of a breakdown from this trend line because so far we're holding support. So you don't really want to short it at support. You either wait for the breakdown and short it, or if you believe that it can, have a further, further consolidation within this channel, this is the place to buy it and put your stop loss against today's lows. What are your thoughts of the Aussie Kiwi false breakdown? Yeah, thank you for reminding me that as well. We indeed had a false breakdown in the Aussie Kiwi, but this is very important. We didn't have a closing, a daily close below this, right? So if you were trading it intraday, you would have easily gotten trapped being short and then getting that whipsaw in your face. But if you were actually looking for daily closes, we didn't have a daily close below this trend line. So I think since the higher the time frame, obviously the more important the signal, I think that the best thing to do is just ignore this false breakdown once again and keep monitoring at the two trend lines for an actual confirmation of a breakdown on a daily closing basis. That's what I think. So I would still be doing nothing with it, right? I'm more inclined to believe that it's going to continue lower because the previous move was lower, but we might have some more consolidative price action, before that happens. So, it's as simple as that. Let me see if I missed any questions. Oh, yeah, USD Swiss. Okay, USD Swiss, we already had a look at Euro USD and Euro Yen. And as you see, USD Swiss, I said it yesterday, is at resistance, at a resistance area. So far, we've had a pause after finding this resistance area. That's not enough to signal a reversal, but obviously you don't want to be buying it at resistance, right? It looks likely to me that it's going to continue higher from here. So I do think that it's more likely that we have just paused at resistance, and I do think that we can easily make it through here and retest the highs, perhaps even get a higher high. But as I said, buying it at resistance makes no sense, right? I think though it still looks constructive, nothing has changed. Let me see if there is any other question I missed. Okay. No, if you want to send any questions, by the way, feel free. Let's have a look at, having said that, let's have a look at the bond markets, because we didn't do so yesterday. So let's start by having a look at the 10-year treasuries. And the reason I wanted to show them since before is because I think that we now have a decent amount of price action to have some more clarity of what might be happening here. And this looks to me like a triangle. And if that is the case, then I think that that would go very well with a continuation of risk off. Because obviously, if we do break higher in yields, that frequently coincides with risk off. And of course, equivalently, you should expect yields, since they're inversely correlated, to move lower. As you see here are the yields. At the same time that the treasuries are hitting resistance of a triangle, the yields are hitting support of a mirror triangle, right? I drew that several days ago here on the webinar, that I do believe that it's very likely that we're going to see one more low, perhaps a push towards the 61.8 at 248. We were having this discussion together, actually, Coach, and I think it's a very, very high probability scenario from a technical perspective. If that happens, I think that the S&P and, of course, in analogy, the rest of the indices will fulfill some of the downside targets that I showed. Okay, so I do think.
Thank you for that, Steve, because I'm going to kind of tee off for my bearish positions in equities. I trade bearish ETF 3 times, senior citizen shorts, and I'll be keeping an eye on that 61.8 area for a place to be covering. So that's a great look for me. It probably will be for other S&P bears. So, you may not know where the S&Ps are going to go to, but if you have more conviction about a related, correlated instrument, you can just use that. And when yields get down there, you should at least be taking some of your shorts off the table in the S&Ps. So I appreciate that, man.
Speaking of which, you talked about it. Let me say here, because I forgot to mention it before, that in the Traders Expo in New York, we're not only going to have a booth, but we actually have a workshop. And the topic of the workshop, because it's very relevant to what you said, is discover the power of technical confluences as a method of pinpointing attractive risk-reward opportunities and learn how to utilize them to either join trends or identify key turning points in the Forex market. And not only
what's even more important, and I want you to remind Joe to do this.
I'm going to be there as well. I'm going to talk about it as well.
All right. Well, when you have the workshop, Joe's got to have teach everyone how to take the Bloomberg stance. Everyone stand up and do the Bloomberg stance for Joe.
That's very true. It's unique, honestly. And since Greg is going to be joining us, I think that we're going to have the. We're probably going to all 3 of us present, from our viewpoint, the topic of the conversation with examples, etc. So I do think that and that's the concept of Forex analytics, right? How confluences, how different viewpoints of the same market, how different signals that point to the same direction.
Can you record both your your keynote speeches and the workshop? Maybe get some type, use your phone or.
I think they recorded. Joe, can you confirm, please, if that's the case? Oh,
he may not be here, but the workshop, if you could record that, it'd be great content, Steve.
I'm going to ask him. We have a question. Let me see. This at the expo thing, Steve, the presentation, etc. I might just need to get down there, not for the presentation, but to meet up with you. Yeah, absolutely, mate. That's why we're also making a get together. So you do that, Zach. I mean, we're going to be happy to meet you in person. Usually they record them, but check the program. I think Ziggy's right. I think they do record them, and they do even broadcast them live.
Wow.
But I'm going to check. Cool. I'm going to check that. I'm going to check that today, and confirm with you on Monday. Okay. So we have a question about the pound yen. Coach, do we have guests today?
Not today, bro.
Okay. So let's have a look at the pound yen that we have a friend asking. There we go. Pound yen. Okay. So pound yen. First of all, a little bit the longer term picture. We remain within a descending channel. Okay. Now, this move lower. Let's now go to a 4-hour chart. This move lower so far looks rather corrective to me. And especially if we do see a breakup from here, I will probably be looking for one more push higher, 145, like 60, 70s is resistance area, a little bit higher, roughly at 147, we have that descending channels resistance. So I have to say that in the short term, pound yen doesn't look bearish to me, right? But you need to put that in context because it depends on the time frame you're trading on with what I said that we remain in a descending channel, right? So if you want to be long in the short term, once we get a breakout, that's fine. But you should acknowledge that, we will be getting at resistance areas roughly once we approach 145.50. So, you should take it, easy there. You should be more careful because we might then have, a reversal and another move to the downside. One last thing I wanted to say, and if we don't have any more questions, we can wrap it up. Obviously, and, that's very easy to understand. Obviously, if we do get that breakdown in yields, if we do get that break higher in bonds, and speaking of that, let me say that the bonds, unsurprisingly, here is the bond, resume their move to the upside. If you remember, I made it very clear once we broke above that channel that this is a very, very long-term breakout, and you should respect it. And we've so far had a nice move from the breakout area, which was roughly at 163.40. We've already made it 166.40. Okay. Now we're currently testing a horizontal resistance area. So in the short term, I would be a little bit careful here, but we do have space to move even higher. Soon enough, we're going to have a confluence of this ascending channels resistance and the 161.8% extension of the last move lower. That's at 167.90. I would be especially careful if we make it up to that level because, a pullback will be due by then.
Steve, that's what we need for the euro to bounce, is for the bunds to top there. And I think Grega was looking for it, so there's one more jiggle up here.
Yeah,
but that could be what's behind it.
It depends at the same time what the treasuries are doing, because it's not enough for the bunds to get rejected from there, because if at the same time the treasuries are depreciating at a faster pace, that's not going to end up helping the Euro USD, right?
Got you. All right, so it's relative.
Yeah, absolutely relative, because it's rate differential that matters, not
exactly
in isolation, rates of one or the other region.
Great point.
So one last thing, we saw the charts yesterday. Nothing has really changed, but keep in mind that if we do see those moves, higher in bonds, lower in risk assets, expect the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi crosses to remain well bid for now, because they overperform when we have risk off environment. It's obvious why, right? Because Euro and Pound are less sensitive to risk. Aussie and Kiwi are more sensitive to risk. So, that should keep a bid on them. So having said that, and having covered all the questions, I want to wish everybody a great weekend. And it's quite early. We still have 1 month. I think it's time you consider making plans to come and join us in New York, 10th, 11th, and the 12th. The 11th specifically is the Forex Day. So if you can make it just for a day, that should be Monday, because we also have the get-together the same night at 8 p.m. Eastern. So thank you very much, Coach, for a nice week and nice interviews.
Oh, you're welcome, Steve. Let's work with me right now. So show the website, company website, please, since you have the screen. So Face, I believe Fridays are the best time to sign up for a subscription, or at the minimum a trial, because it gives you the weekend. I know that I do a lot of planning for the week ahead over the weekend, and it gives you time to navigate and absorb all the research. There's a lot of research so that you're prepped for next week. The best trades are the ones you plan for. Blake talked about it, that he's just sitting this year waiting for his areas. They don't always manifest, but the weekend is a time for you to do your homework and be prepped, so you're not prone to FOMO. You're not trading on the fly, so you have your plan, and let us help you plan your plan. And also want to remind everyone that there's no law against having more than one account. Sometimes, just like in horse racing, you need to run more than one horse to see if you have the better one. And to go to our sponsors, Justin and Trent at Forex Park FX, for the reimbursement program overseas. Overseas, you could also take a check, right, Steve? I mean, if they don't want the reimbursement, they could get a rebate check. You're getting one. And in the U.S., you're limited to only getting money back. Okay, so with that being said, Steve, I think the tagline starts with "Remember."
Don't just count your pips, count your blessings, right, Coach?
You got it, buddy. So thank you, everyone, for all of your support all week long. I have a great lineup of guests for next week, and have an excellent weekend. Enjoy yourself and recharge your battery, and we're going to kick some butt next week. Adios. Thank you for all your support, people that have become part of our community. The private chat, members chat, is an excellent community. They mastermind in there every day. Face is the tip of the iceberg. So immerse yourself in our members chat and surround yourself with traders better than you. That's what I did almost 2 years ago when I joined the team here. So have a great weekend, everyone, and see you on Monday. Thank you, Steve. Thank you, Stel. Thank you, Blake. Thank you, team. Adios.